Good afternoon. We're going to take a look at the oil market, and what I always like to do when I do a new video for somebody is to do it the higher end, so the monthly, then the weekly, then the daily. I don't really think that unless you get a handle on what has gone on previously as to what is going to go on in the future. Now you can see where we had the rally from 2016, and this is on the monthly chart, and it hit that 61.8. Now obviously we overextended a bit because you're always going to have people that don't look at the longer term view and thought oil was going to the moon again. Well, it didn't. That golden ratio of 61.8 is vital whatever time frame you use. It isn't just meant for longer term charts. You can use this on a shorter term chart as well. So there was a lot of selling pressure in oil, and we were seeing last month in particular, you know, days where it was 5 and 6% down. But you know, we haven't reached, I don't think, the base of oil yet, but there are reasons why we could bounce, and this could tie in with what OPEC is going to say. So I'll pop us across to a weekly chart. Now when you look at this weekly chart, although the 61.8 is of the utmost importance, if you look at where it went to, oil actually went to the 78.6. Now we as technical traders and our group, we decided to buy oil at that price because it was extremely rude not to do that. So you had that 78.6 that was not only at 49.63, but it was just below that magical 50 area, and that's why we held. Now this week so far, you've seen oil up, but you see where it is now. It's clinging to that 200-week period moving average, and that's coming in at 52.20. And I think as long as we can hold that 52.20 area for the rest of this week, there is no reason why we can't go back here. This would be my take on it, is that oil can actually go back to the 55.46 area, which is the 61.8, as I've said. And that really is a magical tool that we use quite often in trading, not just oil, but at every market we trade. We're also looking at 3 technical indicators. I look at stochastics, the RSI, the relative strength index, and the rate of change. And the ROC really on these time frames, that if you look at where that is now, you're really oscillating. What you want to do is when you see something like this, when it just goes sideways and it just stays on that 0 line, you know, you could see the price beginning to wane. And once it hit that 61.8 on the monthly chart, that was it. Oil went down. Now please don't be under any misapprehension that the guys who trade oil big time have research departments doing exactly what I'm saying now, and they would have been screaming at their traders that we were going to hit the monthly 61.8. I know I did with my group, and I've also said with this one, when it's hit the 78.6, we're buying oil, which we did. So not only do we do it, we do actually make sure that we trade it as well. Now if you look at what we're doing now, I use a 80-20 parameter. Now we've got weekly RSI levels quite low, but they've bounced off that 20%. But if you look at the weekly stochastics, they're at 5.4. That is extremely oversold. So let's keep our eye on that 52.20 area. So now let's go and pop across and have a look at the daily chart. Now when you look at the daily, you can see that, you know, the oil oscillators, the indicators, they're beginning to pull up a bit, you know, but again, you've got to bear in mind that 200-week period moving average. Now if you're just day trading as well, Look at how the 9-day keeps you in that downtrend. Okay, it really did. So look at it now. It's turned. So you've had it bounce off that 78.6 on the weekly chart, and this is what's happened. So I would suggest that whatever OPEC does, technically this market should trade higher. So just bear it in mind. If you remember that weekly level, look at the 23.6 and the 21-day moving average. They're coming in at 55.71 and 55.83. I hope this has been helpful, and look forward to speaking to you again.